Chapter 1 has three main ideas, which is the cost of plant assets, depreciation, and disposal. In this session, we are going to explain about the revising of depreciation. So, the explanation of revising depreciation can be found on page 24. So sometimes situations arise and management reevaluates a plant asset. This revaluation may include a change in estimated useful life and or a change in estimated salvage value, or what we call a residual value. The useful life is the number of years the manager expects to use the plant asset, and the salvage value, as previously explained, is the book value of the plant asset at the end of its useful life. So in case the manager decides to change in the expected useful life or salvage value of a plant asset, he needs to do the revising depreciation. Please open the book on page 24. Here we have an example. So FixUp purchases an equipment for $100,000 on January 1, 2017 and decides to use the straight line method to depreciate the equipment. The useful life is 5 years. Suppose that on January 1, 2019, the company finds that equipment was overused and that it can only operate for 2 additional years. Compute the revised annual depreciation. Before computing the revised annual depreciation, let's look at the time life of the equipment. So as we said, the equipment was purchased on January 1, 2017 and its useful life is 5 years. So we will use the plant asset till the end of 2021. However, on January 1, 2019, the company decided to revise the plant asset, which is in this case the equipment, and decided to use it for only 2 additional years. So before revising, we have 2 years. So years before revising is the first year 2017 and December 31, 2018. So before revising, the company used the machine for 2 years. What is the remaining life after revising? Well, actually it will be 2 years, since the company decided to use it for only 2 additional years after the revising period. Revised annual depreciation is equal to the net book value minus the revised salvage value divided by the remaining useful life, of course in years. How can we calculate the net book value? Net book value is equal to the original cost minus accumulated depreciation before revising. So we need to calculate the accumulated depreciation before revising now. The accumulated depreciation before revising is equal to the annual depreciation expense times the number of years before revising, which is 2 years. The annual depreciation expense is equal to the depreciable cost over useful life, which is equal to the cost minus salvage value over useful life, equal to $18,000. So the accumulated depreciation before revising is equal to the annual depreciation expense times the number of years before revising, which is equal to $36,000. So now we can compute the net book value in the day of revision, which is the original cost minus accumulated depreciation before revising. $100,000 minus $36,000 equal to $64,000. The revised annual depreciation will be the $64,000 minus $10,000, which is the salvage value, divided by the remaining useful life. As we said, it's equal to 2 years. So the revised annual depreciation is now $27,000 per year. So 2 years are the remaining years after revising. Please pay attention that the salvage value is still $10,000 since it did not change. In case it was given that the salvage value was revised, then the new amount must be inserted in the calculation of the revised annual depreciation.